Hi everyone, welcome to the session. This is Ramanuj Mukherjee. People are still joining in, I see. Let them join. We are going to discuss about career opportunities in capital markets. So, how many of you are working in capital markets currently? How many of you want to work in capital markets? If you can share in the chat, that will be great. I'll share if you haven't used it before. Please try to respond on the chat and let me know. Namit is working as a derivatives lawyer for an investment bank. Excellent, Namit. So you can help me today by sharing some insights. Anybody else? I see Jaideep sir is here. Hi Jaideep sir, please share. Keshav Bharadwaj, I'd like to learn about capital market with relationship with law. But Keshav, what do you do? Please introduce yourself, guys. Come on, quick. Michael, Namit, Priya, Rahul, Shrey, Sneha, Tapas. Tapas has introduced you already. Second year law student. Want to work in capital markets. So we have some more responses. Keshav is a third year law student. Shrey is a third year law student. Lakshmi is there, law student. Priya hasn't said anything about what she does. Rahul, fresh law graduate, seeking relevant insight into career opportunities as a securities law litigator. Okay, that's an interesting thing. Capital markets and securities law litigation are very closely connected, of course, but not exactly the same thing. I'll come to that in a bit. Sneha is a first year law student. We have Michael litigating in Delhi High Court, District Courts, wants to know more about capital markets law. Sumit is an advocate, come CA, wants to know about insights for work opportunities into SAT tribunal. Excellent. We have Priya, who's a fresh law graduate. Great, guys, very nice. Thank you for sharing. Okay, so capital markets law is quite interesting. I have seen people in colleges being fascinated by capital markets law, and they would say that I want to work in capital markets. And when I would ask them that, okay, why do you want to work in capital markets? Very few people were ever able to give me an answer. I mean, most of them didn't even know what capital markets is all about. But people get this that capital markets is there's a lot of money involved. It's like big stakes transactions with they might have read some news somewhere, or may have come across uh, those deals mentioned in economic times and stuff like that. And that definitely makes a big difference. People feel that capital markets work is extremely glamorous, right? So that is actually when people actually practice in capital markets, uh, they you may not enjoy some sort of glamour or some sort of thrill, so to speak. Although capital market lawyers do say that there is never a dull moment in their life, because they are always trying to handle some situation, trying to put out fires, and that's pretty common. Okay. uh, but at the same time, essentially, capital markets practice. Those are the guys in the office, the capital markets. When you're in a law firm, you come to realize that the capital market guys are staying the longest in the office most of the time. And but however, it depends on the market. Sometimes the capital markets is really roaring and lots of IPOs happening, lots of work happening, lots of litigation happening, and but that is not always the case, right? That is not always the case. It is it depends on how well the capital markets at the moment is doing. So let's first start by talking about what are the different, and those who have joined later, please introduce yourselves in the group. Okay, like in the chat, just mention what you do and who you are and what you're looking forward to take back from this session. Please share so that I ensure that I'll try to give you as much value as possible from this session. So let us quickly run through the kind of work that capital market lawyers have to do, right? So capital market lawyers are so first let's understand what is capital markets, right? Capital markets is a public market where people can invest So there are retail investors and public investors. Like there are for example, maybe pension funds, or different other funds. They might be investing. People who invest in public securities, basically publicly listed companies, they can invest in your company, for example. So there is this market where you can list either equity or debt. There can be even debt securities. Basically, you are raising money from the public in the form of equity or debt. Okay, and you are basically looking to access a wider pool of capital, and it is well known that it is cheaper to raise money from the public than from private investors. If you raise money from the private investors, there is a higher uh, levels of returns expected. The conditions are harsher to raise money. You get cheap capital from the capital markets from the wider public, right? So it is always possible that if you are running a company, you can raise either money from the public through through an IPO, or like initial listing of date, etc. But you can also raise money from private investors. So, for example, let's take an example of a company that might be going public soon, right? So, Ola Cabs is one such company. Okay, Ola Cabs is one such company. You might have heard about the failed IPO of WeWork. WeWork is a company which was globally growing, and it was supposed to be valued at some $30 billion, and they tried to do an IPO at that price. Okay, how did it become so big? Because private investors kept pumping in money. Okay, yeah, Michael is saying SBI cards IPO is coming soon, and people are very excited about it. Now, WeWork. Let's talk about WeWork. What happened with WeWork, right? WeWork is a company. It got a lot of investment from a investor called SoftBank. Okay, SoftBank is not really a bank. It is like a private equity venture capital fund, very large venture capital fund. Let's say. Okay, so they have been pumping. They invested $9 billion over the years into WeWork, and WeWork opened lots of co-working spaces around the world, and they said we are huge, we are the future, we are massive. And so private investment kept pumping into it, and the valuation went up over the years. Okay, and people are ready, private investors were ready to give in money at those great valuations. And but finally, when private investors are putting in money, they want an exit at some point of time. Okay, and how is the exit going to come? It's going to come from an IPO, initial public offering. Okay, so when an initial public offering happens, then new security or existing security held by maybe some investors also may be listed in the stock exchange, and basically it gets sold to the private players, and then it gets listed on the stock exchange, and in the stock exchange it can be then traded, right? So the difference between a private investment and a public investment in a publicly listed company is that there is a marketplace for selling your shares. Whether the price can be low or more, prices keep fluctuating in the market, in the public market, but you can sell your shares to somebody else. So there's liquidity. So if you're investing in a publicly listed company, you expect to have liquidity because you can sell the shares to somebody else in the market. That is not the case when you are privately investing, right? So imagine that WeWork wanted to do a listing at 30 billion dollars. Then, however, the difference between a private company and a public company is that in a public company, because you are taking money of the general public, there is a very high level of scrutiny, and there is a very high level of disclosure and transparency required from the company. Okay, so let's say in a private company, because it is privately held, no matter how large, okay, it does not matter if there are certain things are done, and if the private investors are okay with it, that you are okay with it, right? But not so when you do it in a public company. In a public company, every week, in fact, you have to do some disclosures to the stock exchange, so that the public comes to know about anything important that is going on in your company, so that they can decide whether they want to, hold on to the shares of your company or buy more shares of your company, or they want to sell it, etc. Okay, So this is very, very important. Now, when WeWork tried to list, it did not happen because the moment they started making those disclosures and making the information about the inside functioning of the company available in the market, people started questioning them. People wrote articles about them in various newspapers, questioning the practices within the company. And that was disastrous for WeWork. First, they tried to list it at $30 billion, didn't work. People are not ready to pay that. Then they tried to at $20 billion, that didn't work either. Then they tried to even list it at $10 billion, and even that did not work. WeWork did not get listed. So the CEO had to step down. Most of the senior management of WeWork has been fired, and SoftBank is trying to kind of salvage its investments by making some more private investment and hoping that eventually it will do an IPO, and so that it can save it the value of its investment in the long run. Okay, so now that is the situation, guys. So there are private companies where you, even if they are big enough, a small company cannot go into IPO. Okay, it would not be allowed. But if you are a big enough company, you are successful enough company, profitable company, and the public sees value in your company, that they want to invest their money into your business, then you can go and raise money from the capital markets, and you can raise money in form of equity, or even in form of debt. So if you are selling shares, then it is equity. If you are issuing debentures to the public, then that will be debt. And even raising debt from the public, if you are able to raise money through debentures, it is very good. Okay, it is considered very good because usually you are able to get better interest rates, better terms and conditions for repayment. You do not have terrible events of default clauses set by banks that you normally have when you raise money. Say you're taking a debt from the bank or a NBFC, you'll have quite hard kind of terms. But if you're raising it from the capital markets, from the debenture, from the public, you get better terms essentially. Okay. Okay, great. Now there. So you understood briefly, like there are stock exchanges, and there are shares, there are equities, there are people doing IPO in the stock market to raise money at good terms from the general public. Okay, now all that's great. Now where do lawyers come in? So we have to understand that the engagement of a company with a stock exchange involves a lawyer's presence in almost every stage. Okay, so capital market lawyers. So there are two sides to it. One is transactional and advisory, and the other is litigation. We'll come to litigation later. If you have litigation in India related to securities, you go here. You go to the SAT, the Securities Appellate Tribunal. But other than that work, okay, other than that, or maybe filing a writ sometimes, or going to High Court, Supreme Court, etc., for various things, most of the time you are dealing with, like apart from SAT and litigation related to securities, we are talking about only one work, that is transaction. I would request everybody to stay on mute unless it's necessary for you to speak up. In that case, please let me know. I'll allow you to speak. Okay, so okay, so let's jump in. Like, acha, who are the different actors in the capital market, right? So in the capital markets, on one hand, you have the company which is trying to get listed or already is listed. Okay, in an IPO transaction, for example, you have a company, and then you have an underwriter. There's an investment bank which underwrites the issue. Okay, so what is underwriting? Just to explain it very simply, let's say so stock exchange will say that when somebody is going to list, like you are offering it as an IPO, but what if nobody buys this? What if only 10% of the securities are bought and the rest of it is not bought? Because if rest of it is not bought, then it will be wasted. The 10 people who invested money, their money will be wasted because it will not get listed and things will really bomb, right? For those few people who buy it, and the other people did not buy, so it will be a disaster for the few people who bought. So there, everything that is offered has to be underwritten. So underwriting is that there is an investment bank which says, you know what, if this, we are so sure about the securities and we already have people lined up to buy this security when it is listed. If they do not buy, then we will pay for it. We will buy it. Underwriting. Okay, we are underwriting the risk of this IPO. So they get a fee for doing all of this. They also have lawyers. Okay, so you have a lawyer acting for the company, then you have a lawyer for the underwriter. There are merchant bankers, okay, who might be playing a role either way. So they might hire lawyers in the process because there's so much of the responsibility is on a merchant banker. And merchant banker and investment bank may be the same thing in some cases. So I was saying that SEBI also has lawyers, right? SEBI's job, of course, is to ensure that nobody's stepping out of the line, nobody's doing anything that is against the law or the rules or the ethics of the capital market. Okay, so for example, SEBI took SEBI basically waged a legal war against Sahara. Sahara was a big company which had raised a lot of money from the public, uh, but according to SEBI, this was wrong. So SEBI prosecuted them over the years, took the matter to SAT, then High Court, then Supreme Court, and finally Supreme Court said that SEBI is correct and Sahara has to return the money, etc. And anyway, the point is that this was very, very critical, right? It was a critical factor in the of SEBI's job of that they have to hire lawyers who are going to always they are going to frame the rules, they are going to enforce the rules, they are going to litigate if necessary on behalf of SEBI and ensure that people are toeing the line in the industry. So there are three players: companies which are getting listed, entities that are getting listed, and then you have investment bankers, merchant banks, and then you have the regulator. So these are the three main players who have their own lawyers in any capital market transaction involved. Okay, people miss the regulator lawyer part very often, but that's also a major area of work for lawyers. Okay, now let's jump into what exactly. Now that we know that what lawyers are doing, let's talk about what are the lawyers actually doing. What is the work they do? Right, that's important to understand. So the work they actually do. So I'll see there is a lot of things a lawyer does in a capital markets work, but let me highlight the some of the important things that they have to do. Some things that are very critical. So one critical thing for them is to do due diligence. So before a company can be listed, a very thorough due diligence has to be done, and this is the highest level of scrutiny in any due diligence that you'll ever see anywhere. Right, before an IPO, the kind of due diligence that happens is considered the most thorough due diligence ever. Okay, so everything that matters will come up, everything will be pointed out, everything will be highlighted. Nothing is too small, nothing is like too remote to consider. Okay, and that is the level of due diligence that happens in this thing. And mostly the junior lawyers who are working in law firms in capital markets teams, they are doing the due diligence. Okay, interestingly, due diligence over time is becoming easier. There is more and more software driven and AI driven due diligence that is happening. That does not mean that lawyers stop working. It just means that fewer lawyers are needed to do that due diligence. But there are still young lawyers are the junior lawyers in capital markets team, they are doing the due diligence. Interestingly, many law firms are now setting up their own transaction groups. Transaction group. What is a transaction group? It is basically people who sit and do due diligence. Okay, so Cyril Amarchand has it, AZP has it. I think most of the law firms have begun to set up their transaction groups, and the transaction group lawyers do due diligence. They don't do anything else. They don't do any other value-added work. They just do due diligence. So if you are good at due diligence, you can get a well-paid job. Okay, it may not be the career track to become from associate, then senior associate and partner, but it's a well-paid job. Okay, so that is there. And not only in these Indian big law firms, there are foreign law firms which have set up their transaction, this kind of due diligence kind of setups in India, right? So Clifford Chance has some sort of office in, like, a captive LPO in Delhi, where people work on global matters of capital markets. So if you are good with capital markets and due diligence, if nothing else, you can always get some work from there. So that is an option. Okay, now apart from due diligence, what is the other work? So after you do the due diligence and you find out what is wrong with the company, what are the problems, you have to give disclosures. Okay, so you draft something called a draft red herring prospectus, in which there are disclosures, 1, 2, 3, 4, 5, 6 disclosures will be there, and those disclosures will have to be written in a certain language which adequately discloses the risk of of the business to the potential investors. And this is very, very critical, like, very critical work to actually be able to disclose that information appropriately in the form of disclosure, of the risks that are actually, that may or may not materialize, but we must disclose. That's the approach. And it takes a long time. Like this, if you ever see a draft red herring prospectus, it's a huge document. Maybe what I can do is I can quickly show you a draft red herring prospectus online, because you can find them online. Okay, that's the fun thing about a draft red herring prospectus. So I can open a sample online right now and show you, like, the kind of drafting involved. Right, so this is a draft red herring prospectus, guys. It's very difficult to read. I think they write it in really small letters so that nobody can read it. Okay, but this is a draft red herring prospectus uploaded on NSE India website, as you can see, by a company called Sintercom India Limited. Right, and this is drafted by a legal team. Right, just look at the contents, definitions and abbreviations, general risk factors. This is where risk factors there. It's a summary of the risk factors in the company. Then the introduction, summary of the industry, summary of our business. All this is, some of it is given by the business people, by the company also, but lawyers vet everything, all of this. Okay, about the company, our industry, all of that, management, financial statements, right? Financial statements as restated, management discussion and analysis of financial condition and results of operation, financial indebtedness, right? Legal and other regulatory information, outstanding litigation and material development. This is come out of due diligence, and then they are disclosing all this over here, right? So you guys can see this, and let's jump to page 17, where they're discussing the risk factors, for example. Yeah, these are the risk factors, right? So this is all, for example, see the language, you'll realize that this is literally written by lawyers. Unless otherwise stated in the relevant risk factors set forth below, we are not in a position to specify or quantify the financial or other implications of any of the risks mentioned herein. Unless otherwise stated, the financial information of a company used in this section is derived from our restated financial statements prepared in accordance with Indian GAAP and the Companies Act, and restated in accordance with the SEBI ICDR regulation. To obtain a better understanding, you should read this section in conjunction with chapters titled Our Business, etc. All these things, right? But clearly, this is a document which is drafted by lawyers, as you can see. So now I'll stop sharing this document. You can always go and read a draft red herring prospectus anytime you want, right? Nobody stops you from doing that. But what I wanted to show you, that imagine that 350-page document has been drafted and vetted by a team of lawyers. Okay, it can take months to get one drafted, because it's not just that you are writing down a story, right? You are literally, you have to verify each and everything. You have to confirm from this expert or that expert. You have to consult tax lawyers, environment lawyers. You have to consult, like, you have to get opinion from maybe a retired judge, just to write something over there in that document. Okay, so it's a lot of work, massive amount of work, and that's just how a lot of work that capital market lawyers do in that respect. Okay. So, and in fact, majority of work, bulk of work could be around that. Okay, now these two things I talked about was draft red herring prospectus uh, and the due diligence. What is the other work that is involved in capital markets? A little more senior level work is like strategy, deal structuring. Okay, like structuring a security. Okay, so, for example, if I am going to issue debentures in the market, what should be the terms of of those debentures? What are the terms of repayment? Am I providing any securities for that or not? Okay, uh, you know, um, what if I cannot pay back? Are there any consequences or whatever? Like those can those debentures be converted into equity later on or not? Okay, so all of these things are decided by partners working with investment bankers, working with the sometimes working with the with the regulator, which is SEBI. They work together to figure out what would be in the best interest of the company, what kind of securities we can issue, and what would be their terms and conditions. And is it suitable to the market condition? Even that is important, right? So the lawyer who's a partner, let's say, in a capital markets team, even has to think of that okay, that what is in interest of the company, and structuring the security, structuring the deal, that is very important. Okay, so as you grow up from doing due diligence and from drafting red herring prospectus, etc., over time you start to become somebody who can plan those things strategically. Okay, and basically help the clients with the right kind of solutions in terms of what they're going to offer and how they are going to get it done. And getting the timing right also sometimes very important in the capital markets situation, because you don't want to go to the market when the market is down. You want to go to the market when it's heated up, and there are windows of opportunity, and you are keeping an eye on the market data that is coming in. So you may want to list in a certain quarter or not in the next quarter, and stuff like that keeps going on. If your IPO is not done within a certain period of time, it might investors may lose interest in it. So there are many things like that. These are like business concerns that the partner has to ensure that from the legal team there is full support to get it done. Okay, to get it done the way that is needed to be done. So timing is, so that's why capital market teams have a lot of redundancy. They hire more lawyers than they actually need in a given point of time, because sometimes they might get a big transaction which they have to push through really quickly, and if they don't have enough manpower at the time, they'll not be able to do it. So that's why they hire more people, and they're fine if those people are sitting around not doing any work for a while, but suddenly they know that one day there'll be a big transaction from which we'll make a lot of money, but we cannot take that transaction if the we don't have any enough number of lawyers in our team. Okay, so that's how it works. Okay, so apart from this, what is the other work? Now, listen, even if I get listed, my work does not get done, right? Because now I have an ongoing relationship with the stock exchange, and I have to draft disclosures like everything that happens in the company. Maybe I lost a valued key manager. Maybe I lost some big contract. Maybe government is planning a certain law that goes against me. Now, whatever I do legally, maybe a litigation started, whatever my legal department is doing, that's okay. But I need to now have a capital markets arm in my company, or I may have a lawyer doing it for me, a law firm doing it for me, that they'll constantly comply with all the regulations of SEBI and constantly disclose to them in the right language and in the right way, constantly disclose all of these things. Otherwise, the company will be in grave trouble. Okay. Okay. Let's see. We have some things people have said. Rahul is saying endless compliance with SEBI Act regulations, listing agreements. Exactly. All these things that are there, you have to endlessly keep complying to them, and a lot of manpower is needed. In a law firm, uh, they normally, the capital markets practice focuses on IPOs and listings of date or whatever, but they do not do the compliance part. Compliance part, either companies have their own compliance departments. When you're a big enough company and you've been in the market for long enough, you create your own team to do the compliances. But from time to time, there are some complicated situations for which you go to the law firms, big law firms, to take their opinion that what should I do in this scenario? Should I hold the share? No, can I hold the meeting in this way or that way? Many different questions come up, and big law firms make a lot of money from this, because when you are a public company with critical questions, you need to go to the biggest law firms just to show to your shareholders that we have done our best. We have gone to the best law firm, paid the best fee to get the best advice. Okay, so that's really interesting for law firms. Many of them have regulatory financial regulatory practices and etc. Like practices that are around that, not just capital markets, but they give it another name also, which is around regulation of capital markets, right? So one is listing and transaction, the first listing, IPO, and even follow on listing, etc. Right, follow on offers, all that kind of things are there. Qualified placement of securities to QIBs, qualified institutional buyers, and all of that. But in the end of the day, that is one part of it, where you are selling the securities, or maybe there's a block transfer of securities, all of that. But then you have another group of capital markets lawyers who are not doing transactions, but they're advising on how to do things. So I'll give you an example. Let's say that I'm a bank and you placed your shares with me, and you are not able to repay me. Okay, and I need to sell a bulk of your shares. Okay, maybe 10% of your entire company. It was pledged with me, and a single day I'm going to sell it all on the stock exchange. It's a block deal or a bulk deal or whatever. Now, how to do it right, because when I flood the market with security of one single company, the price of that security will plummet, will go down like anything, because there won't be enough buyers, and because I am making more shares available in the market than there are buyers, even if that company is otherwise a good company, okay, and otherwise have a good price, good demand in the market. But if I flood the market with anything, of course, it's going to affect the prices. So what happens in that case, right? Should I be, are there any other legal liabilities, right? So there are many questions over that, and how to get it done right, because this is such an important transaction. How to get it done right? So you need capital markets lawyers or securities lawyers who advises you on that. Okay. Michael is asking, is due diligence good for learning in initial stages? Yeah, it's very good for learning, but you learn only due diligence. By learning due diligence, you won't learn the rest. Okay, there's this misconception amongst people that by doing due diligence you're learning everything. No, you're not learning everything. You'll not learn to draft a DRHP until you draft a DRHP. You'll not learn how to write disclosures or how to interact with the stock exchange or SEBI until you actually do so, right? I forgot to mention, stock exchanges also have their lawyers. They have good legal teams, substantial legal teams, and they often go to law firms, to hire law firms for advice. Okay, guys, let's move on. So I have told you, so of course, once some work is before listing, some work is during listing, some work is after listing. Now, regulator. So there's the other part is litigation. So where do the litigation and disputes work come in? Capital markets related disputes work, which is securities litigation, right? So where does that come from? Before I go to that, let me talk a little about in-house legal work with respect to capital markets and with respect to this. So there are a lot of banking and finance companies, right? There are a lot of companies which are intermediaries of different nature, right? So for example, there are private wealth management companies, okay? There are investment advisors. There are hedge funds, okay? There are alternate investment funds, right? So all these people who are dealing with public securities in one way or the other, stockbrokers, major stockbrokers, okay? So all of these people who are dealing with capital markets and securities in one form or the other, dealing with the stock markets in one form or the other. All of them need legal compliances under SEBI regulations, but that is not the only thing. They also need, strategizing. They need compliances. They need a lot of different work that arises. So if they have enough work, then they hire their in-house legal teams or they go to law firms which can get the work done. From time to time, they find themselves in crosshairs with the stock exchange, for example. Like, let me give an example. Insider trading is a very good example. Okay, insider trading regulations are there, and if there are any sort of allegations of insider trading or suspicion of insider trading, in fact, it is a responsibility of a company to ensure that their employees are sufficiently aware about insider trading rules so that they do not engage in any insider trading, right? So companies hire us, LawSikho, to create modules for their employees where we teach them about the insider trading rules, why insider trading cannot be done, what is insider trading, what is allowed, what is not allowed, what is sensitive information that cannot be shared with people outside. Because if you share sensitive information and then they go and buy some shares based on that and SEBI catches you, your company is in a great deal of trouble. You are in trouble, forget that, but your company also gets into great deal of trouble. It creates negative press, it may negatively affect the price of the shares, all of that, right? Because of that, we have people, working with companies, ensuring that there is no insider trading, ensuring that if there are allegations of insider trading, then how is that to be handled? Okay, how is that to be taken care of? And these are very, very well paid areas of work because these are so sensitive. It's like, a doctor who's operating on your brain and a doctor who's operating on your, let's say, I don't know, like, on your, I mean, somebody operating with your brain, although let's say your hands are very important. Okay, somebody's operating on your hand, still that is one thing, but that somebody operating on your brain is going to probably charge you more because the brain is so important and so intricate, right? So it's like that with people who are working with in these aspects of companies, regulations and compliances and everything. So very, very important, guys. Okay, so litigation arises out of this, that whenever there is anything by SEBI is itself a big litigator in this industry. SEBI is always prosecuting people for this offense or that offense, and people are fighting back. Okay, sometimes there are litigations by, say, minority shareholders against majority shareholders. Things like that also happens, but that is rather rare. Shareholder disputes are growing in number, but sometimes you go to NCLT, not to SAT for that. Like, there's like there are things like mismanagement and operation. For that, you will go to NCLT, like the Tata Mystery case that happened in NCLT, not in SAT. But in SAT, it is mostly related to stock exchange regulations and SEBI regulations. Let's see what questions we are getting. Keshav Bharadwaj is asking, what are the key documents in capital market transactions? Key documents. So DRHP is a massively important document. I mean, it's not. I mean, what do you mean by key documents? Like the prospectus, of course, the draft hearing prospectus when it is finalized. These are important documents. Disclosures are important. What else do you mean by important documents? Manish Kakriyal is saying company secretary handle compliance part. Company secretaries handle compliance part. Sometimes lawyers handle compliance part. There is no hard and fast rules really. I have seen everybody doing everything. I mean, these days it's whether if you can do it, you can do it, and nobody's going to say what's your degree? Are you a company secretary? Are you a lawyer? Really, people don't care. If you have the skill, you do it. Of course, there are certain legally mandated requirements under the Companies Act for which you need a company secretary, but that you can have a company secretary in the team who certifies everything, so it doesn't matter. Anybody does. Sumit Kansal, please shed some light on litigation aspects and ways to acquire capital market work for an independent lawyer. Okay. Yeah, I realize that while explaining capital markets work, I have not talked much about the career opportunities. So let's start with that. Okay. So okay. So in capital markets, the most of the work, interestingly, is it with big law firms. Okay, not so much with smaller law firms. So whenever it comes to an IPO, etc., big law firms corner most of the work, and it is very unusual. And I haven't heard really of a small law firm being able to do IPOs or any kind that sort of transactions. Okay, very hard to break into that market. Even second tier law firms cannot easily break into capital markets work. Only the tier one firms manage to. Okay. Now that is as far as the IPOs and listing and all is concerned. What about the other work? Okay, the work that you can start with if you are a young lawyer. If you are, one option is to go and join a big law firm in a capital markets team. But if that is not the of the interest, then what else can you do? The opportunity where I see massively is in compliance and in litigation. Okay, so compliance, why? Because there's a proliferation of companies which are listed. There's a proliferation of companies which are intermediary in some, even if they're not listed, they're intermediary in some form or the other. And all these people, not necessarily they are very big, by the way. Some of them are quite small, but they are intermediaries and they have to comply to regulations. Okay. And for them, it is very important to understand and apply capital markets law. Maybe I am a category two alternate investment fund, private equity, fund, and I am going to invest money. I'm going to invest money in public companies. Some of my money will also go into public securities. Now, I may want a lawyer to explain to me various complications and implications. So that is one good example where young lawyers may get an opportunity. Similarly, there's a lot of litigation, there's a lot of prosecution happening of young, smaller companies, SMEs. There's a SME listing also. There's a in the boards. There's a SME listing. So they have issues. They cannot afford big law firms. They cannot afford every time to go to a lawyer who's very expensive. They are okay to work with younger lawyers, especially in SAT litigation. If you go to SAT, you will see that fairly young lawyers are arguing. It is not all big law firms and all. There are like fairly small law firms, independent practitioners arguing there, and people doing different niche work. Somebody may be doing only insider trading consultancy, helping companies to steer clear of insider trading. Somebody might be working on other kind of offenses. Okay, uh, you know I have heard of really weird cases. Like there was a case where someone punched the wrong number and sold off the shares. There's a lot of disputes retail investors have with companies, with the brokerage houses that they're using. I have done a case, at least myself. So there was one case where the broker basically misused the money of the retail investor in the account. Okay, really misused it. Now, why I'm saying that you do, so basically we had to recover the money from the broker. We did. Now, what happens is that when you start working in adjacent sectors, helping maybe even the retail investors, small investors, you go and help them out on such matters. It makes a big difference because you start making a name in the industry, and then you start getting better matters, big matters. But it is easier. Find the people who are underrepresented. Find the people who do not, maybe not able to pay much, right? So I recovered 15 lakhs for that in that particular case of the brokerage, misusing the funds of the. So I got a very small fee. Like I got a fee of like I think 10-12,000, but the person got back 15 lakh rupees. Okay, but that's how it is. I mean, you don't mind when you are getting into an industry. You find opportunities, you find gaps where you can go and start working, because that will give you experience, that will give you knowledge. So I can assure you, if I went to that brokerage house and said, give me work, they'll probably be very interested, because the way we handle the matter, that impressed them. Okay, it's a different thing. I did not want to pursue that line of work, but if I did, I could go to the brokerage house next and get work from them, because they were very impressed with what we did in that matter. Okay, so this is how it works. Okay, Manish Kakri alleged an IPO, QIB, NII, RII, merchant banker involved. Yes, of course. Right. In case of IPO and FPO, mandatory. Draft prospects filed by merchant banker to SEBI. Yeah, sure. Okay, great. SEBI mandate to obtain certificate from company secretary before coming out. Of course, there are certificate requirements. But do you think that in an IPO, sometimes there are 100 people working. There are 50 people working in a matter. So company secretary, one person has to certify. It does not mean that lawyers don't get through the work. There may be some, BCom graduates who are doing some of the work for all you know. Okay, it doesn't mean that company secretaries have a monopoly over all compliance work in stock markets. How do we compare capital markets practice with other practices in the law firm? Yeah, so that's an interesting question. Capital markets is very very intense, very high stakes. Like, if you think M&A is high stakes, capital market is even more high stakes, and it is something that which requires, I mean, that capital markets in a way is a lawyer's paradise. Why? Because it is so legalistic, so, so extremely technical, so extremely like, uh, you can't even like bend the rules. You have to like extremely like legalistic, right? And that is very good for a lawyer, because that's why lawyers get paid a lot of money in capital markets transactions, because uh, if you do that in a private, the way you can be a stuck up lawyer in a capital markets scenario, sometimes you cannot do that in anywhere else, because you have to care about other things. But in your job is to be you want all the T's and all the I's dotted and all of that, like that kind of super kind of hung up kind of lawyer you get to be, and you are supposed to be in a capital market transaction, because that is how you add value to your clients. Okay, of course you need business acumen also, and you need to support the business also, but in the end of the day, due diligence is all about that. DRHP is all about that. Like, you can really like you add value by being a very how do I say, like hard ass lawyer. Okay, that's one way to say it. Now, anyway, but the point is that you are going to work hard. There will be some drought periods where you may get to enjoy life a little, but otherwise you will be spending weekends and the Saturday, Sunday nights and whatnot. Like, you'll be working late hours in capital markets. That is how it has traditionally been. If you are in SAT litigation, not so much. If you are doing SAT litigation, it's just like any other litigation mostly. Compliance is a little better, but if you're doing transactions and doing IPOs, that's really tough. I mean, I would say that one of the hardest working lawyers in law firms are capital markets lawyers, in my experience. Okay, is corporate law and capital market law connected? Of course, they're connected. Like, you have to know company law, you have to know contract law. I mean, all of that goes without saying. What is corporate law? Like, it's a corporate law practice within the bigger realm of corporate law practice. There will be a capital markets practice. Just like there's an M&A practice, there will be a capital markets practice. This is all corporate law. And what is corporate law? If you're talking about Companies Act as corporate law, then, well, like, yeah, of course you need to know company law to be a capital markets lawyer, but you have to know much more about corporate governance. Lot of capital markets is all about corporate governance. So you have to know Companies Act, which provides you a part of the corporate governance, but you also need to know the SEBI regulations of different regulations, the LODR, takeover code, whatnot. You know all of those things also, because you have to that is also forms part of corporate governance for a listed company. Okay, so that's how it is. Before we raise equity finance, Arun Joshi is asking, or corporate debt of any kind, can the parties decide the recourse or default in the investment contract itself? IVC, SARFAISI, court, ARC, or the route is not in the hands of contracting parties? If you are raising, so are you raising it from private parties? That's one thing. If you're raising it from the public market, that's a very different scenario, because if you're raising from public, then most of it will be dictated by the rules of the stock exchanges and the SEBI and etc. That's not much scope to play around. But yes, there are certain things you can decide contractually. Similarly, if you're raising it from private parties, then you have much more leeway as to what will be your recourse, etc. Remember that there are things you can decide contractually, but there are things that is the law of the land. If law, you cannot override the law of the land by writing a contract. So you have to follow the law in that case. So for example, I cannot enter into a contract with a bank where I say that DRT will not have jurisdiction over me in case I default, right? That's not possible. So that's how it works. Are there courses offered by LawSikho pertaining to capital law? Michael is asking. So we do not have a course that teaches IPO and capital market transactions yet. We do plan to certainly launch one. We don't have one yet, but we have courses on SAT litigation, because that is where we find more opportunities for individual lawyers and young lawyers. So we have a course on SAT litigation. We have a course on corporate governance, so company law and corporate governance. That is very, very relevant. If you want to be a capital markets lawyer, you may want to start from learning corporate governance, company law, SEBI regulation. So we have a course on that. And we also have a separate course on SAT litigation, where we teach people what are the different kind of litigations that come to SAT, how to draft for that, how to advise clients for in SAT litigation cases. So we teach all of that. So we do not teach but IPO or drafting, prospectus, disclosure, those things we do not have a course for yet. Rahul is asking how to get into capital markets law firm if we have no work experience in securities laws. Are there any other routes to get initial experience? So if you are a young lawyer and you want to work in capital markets, okay, here is my suggestion. One way to get, so you need to build an initial CV. Okay. So first of all, learn company law, SEBI regulations very well, learn about corporate governance very well. That is minimum expected from you when you go to an interview for, capital markets. You must learn SAT litigation. You learn about things like SAT litigation. So you know the kind of problems that arise later on in listed companies. That will be a great starting point. Then you start writing articles on these things. Okay, on the latest thing, like there's a Tata Mistry, there's an NCLAT judgment on mismanagement operation. Why not write some articles about it? So that is one thing. By doing that, you will have an initial CV, at least your CV. Look, if you go to a tax law firm and there's nothing about tax in your CV, then are they going to listen to you? Are they going to even give you a chance? They will not. They will just be like, ये कौन आ गया? इसको tax के बारे में कुछ interest ही नहीं है. Still just for a job. Looks like a desperate idiot who has come to us looking for a job. Never had any interest in tax, but still came here just because he's desperate. So they'll not take you seriously. Same thing with capital markets. So if you want to work in capital markets, build a CV for it, build a track record for it over the years. So write articles, go to events, meet people. Like, you build up a track record to show that you are interested in capital markets, and it is not a fleeting interest. It's not like, oh, last 3 months I've been excited about capital markets. That doesn't work, right? If you show that, yeah, over the last 1 year or 2 years or over time I have demonstrated interest in capital markets, that is a very good thing. That's why you keep writing articles, keep engaging in conversations, and develop a genuine interest. If you do that, then you will be able to see capital markets, when the market heats up, they just need lots of lawyers, right? Sometimes they are just desperate. They are like, kisi ko bhi le lo. It's okay. And at those times, if you are out there with a good CV and you go for some interviews and you go and tell them, look, I don't know, I have never done capital markets work, but I am good at corporate governance. I have good company law background. I know the SEBI regulations. I have written articles about capital markets. I know all the basics. Okay. And I've done some courses like this, etc. They'll be very happy to give you the opportunity at least. I mean, like I said, like right now, if you go and try to get a job, there are barely any IPOs happening in the market, right? Barely any IPOs happening in the market. The market is down. The economic indicators are bad. They are not hiring capital market lawyers right now. I assure you. Even if you're out of a capital market job, you'll find it hard to get another one, despite having experience in capital markets. But if you are the when, like say sometimes some big IPOs just come and the law firm is so busy they need new lawyers, they will be very happy to bring you on at those times. Okay, but you have to build your CV and your track record first. Okay, what red herring prospectus is all about? Does capital market lawyer job get affected with changes in market operation? Yeah, exactly. That's what I have been saying, Keshav, that it big time affected. Red herring prospectus is basically before before people started paying money, you have to get your draft red herring prospectus published to the public and approved by the regulator, by the stock market, so that so that you know it goes through. Like then you go to the next step until the merchant banker approves of your draft red herring prospectus. Then it goes and uploaded on the NSE or BSE or whatever stock exchange website. Until then, it does not even start. After that, the process of book building starts. Okay. So draft red herring prospectus is a very critical document in the process. Okay, guys, if there's any other question, happy to answer. Otherwise, I'm going to take your leave. I have my rest of my Sunday to catch up with. I'm sure so do you. Any quick questions? If you don't have any, Arun Joshi has raised his hand. Do you want to come online and speak, Arun Joshi? Please unmute yourself and speak if you like to. Or I can unmute you if you want.
Yeah, you
Yeah.
please unmute.
Please tell me, Arun.
Yeah. Are you able to hear me?
I can hear you. Go on. Everybody can hear you. Please speak.
Yeah. Are there pre-existing consortia of legal firms, then company secretarial firms, chartered accounting firms, taxation firms, and firms which are of engineers, technocrat firms? Consortium of them who work jointly for securities market, or there is only one firm with multitude of expertise in it. How does the market work?
I understood your question. I'll answer it. Okay.
Okay.
So what happens is that there are law firms, and law firms hire CSs. Law firms hire CAs whenever they need. There are CS firms which hire lawyers, and there are best friend firms. So there's a CA firm, they have a law firm. In many cases, there are these big four companies, the ENY, KPMG, Deloitte. They have their best friend law firms. They have law firms that they have supported and created and fostered. Okay, and those law firms closely work with those big four firms. And there are many other examples. Okay, like every merchant banker has their favorite law firms and all of that. Like they're already pre-existing relationships in the market. But yeah, you can go and build another consortium. Nobody said no. You can always do it. Okay. Shrey is asking, do you think taxation law and securities law would be feasible subjects to pursue as a law student as a good career? Is it practical to expect gain theoretical mastery over these subjects in span of 2.5 years? I am interested in both. Yes, answer to yes. All of that is yes, Shrey. It can be. We have Arun. Are you raising your hand again? Or Sumit Kansal want to speak, so I'll give Sumit an
Ramanuj,
opportunity. Yes.
can you hear me?
Yeah, I can hear
So,
you.
okay, so I think most of us are based in Delhi, and I find that SAT is based in Mumbai, and there is only a single bench in Mumbai of Securities Appellate
Yes.
Tribunal. How
Yeah.
do we acquire litigation work regarding SAT from Delhi? And because it's just one tribunal.
So with every advantage, there are disadvantages, and with every disadvantage, there are great opportunities. Okay. So I'll tell you how it is. So there are listed companies all over the country. Yes, there are listed companies in UP also. There are listed companies in Delhi. There are listed companies in Haryana. Now, what happens is that if there is an actual litigation, surely they may want to hire a lawyer in Bombay. Okay, because they are doing more work over there. But they need regular advice, and often companies prefer somebody who's in the same city as them, or has a close by. So it is very much possible to become an advisor on SEBI related issues, corporate governance issues to a company closer home, and you build relationship with them, you network with them, and tomorrow when they have matters, they will not mind if they have a relationship with you, they trust you, they like you, they know. You know, it's very hard. If I trust one lawyer, if I trust one doctor for that matter, I don't go to a second doctor. In the last 5 years, I've consulted only one doctor for everything. If he says that no, you go for another doctor, this specialist, I'll go. Otherwise, I go to the same doctor and refer all the people I know to the same doctor. If they ask me, I say no. That is how lawyers are also are, right? So once you are a company, as a promoter, as a entrepreneur, as a senior executive, you come to trust certain lawyers. You do not shift very easily because shifting is costly. You know, you have to find out another trustworthy lawyer. So you begin to build those relationships closer to home. You don't have to go to Bombay to get started on this. And as you start building those things, you will see that they'll be even if they're instructing a Bombay law firm to argue in SAT, they'll be like, can you please go there and charge on hourly rates and ensure that, you know, our result is delivered. I don't know what those law firms are saying, but if you are there present, I'll feel better. And there are many ways to get into that line. Sumit, does that answer your question? Did you get away or not?
Yeah, that's very fine. I got it all. Thank you so much.
Okay. Thank
Excellent.
you. Thank you. Thank you. Okay, thanks everybody. If you can give me my marks now, 0 to 10, 0 being very bad and 10 being very good. How much should I get in a scale of 0 to 10 for this session? This is for my feedback, so I know if I'm on the right track, if I'm doing well, or do I need to do better. Michael, 9.5. Kshitij is 10. Okay, great. Anybody else? There are so many people who participated, 23 people still in the session. And what are you taking back from the session? What are you going to do new? What are you what did you learn? What new action you're going to take? Because Gyan is never useful unless you take some action. So promise to me right now in this session what action you're going to take so that you actually benefit something from this session. It's not just idle talk, an idle thought process, right? What are you going to do? What are you going to do? What are you going to do in the next 1 week? Michael, I would explore SAT litigation and also capital market. What will you do in the next 1 week, Michael? Utkarsh will later work with SMEs. Okay. What are you going to do in the next 1 week? Start writing articles and look for some extra work with CM intermediaries. What is CM intermediaries? We'll read about everything, how it works. Great, guys. Thank you very much. Just think about it. If you're not committing to do something in the next 1 week, then you are not doing justice to yourself. You need to, be clear about your action plan. Unless you take action, nothing happens. Capital markets intermediary. Okay. All right. How to start interning from small firms. Just grab. We talk about internships many times. I'm not going to repeat that today. Thank you, guys. Thank you. Thanks for joining in. Take care. Have a great weekend. Have a great Sunday.